Hello, everyone, and welcome back to another session of Market Outlook series. Let me just check if my mic is working. Yes, it is. If you can hear me clearly, just give me a thumbs up in the comments so that I know you can hear me fine and we can get started with this session. Anybody can just give me a quick confirmation that the audio is working fine and you're able to see and hear me clearly. It will be really, really great if someone can just give me a quick confirmation. I think everything is working fine. At least that's what my system tells me. So we will get started. So hello and welcome back to another session of the Market Outlook series. I am Kavita Agrawal and we are here today to talk about Nifty, Bank Nifty and the intersector analysis. Every Friday, I come live after market to discuss what has happened in the entire week and comment a little bit more about what the price action suggests about the upcoming week's price action. Without much delay, let's get started. Uh, the whole purpose of doing this weekend analysis with you is to create a mindset and objective outlook about what to expect. Having this objective outlook, irrespective of other distracting pointers, like some people will say that it's Diwali, so the markets will fall. Some people will say it's Diwali, so the market will rise. The truth is, all of this is just guesswork. Even if you look at the data, 50% of it suggests that the market went up, 50% suggests that the market went down. So those kind of observations don't really do any good to you or anybody else. You have to stay focused. You have to stay very objective. Let the price tell you what it's going to do. Other data points are not going to help you a lot. So let's move on. All right, so let's put a full screen on this. And now you can see that I have the Nifty 75-minute chart. Now we've shifted to the 3-minute time frame. And like every week, this is the time frame that we are going to start our analysis with. All right, so this is where we ended Friday, and this entire week we can see a bit of a upside happened. Now the upside, all right, this price regular. So on the upside, what we can see is that Nifty has taken resistance at 19,450. So in the weeks gone by, I had told you that after Nifty took support at 18,800, 19,200 and 19,400, 450 were the two probable resistance zones. So the first resistance zone got breached and we saw resistance now coming in at the 19,450 mark, right? Now, looking at the 15-minute time frame, we can see two very clear things. One, there is the resistance coming in from one moving average, which is the 200 EMA of the 75-minute time frame superimposed on the 15-minute time frame. And then on the RSI, if you see of the 15-minute time frame, we can notice that there is a negative divergence, right? Another thing which is very evident in this rally is that the upside which we've seen from 18,800 all the way to the level of 19,450, a lot of volume participation has not been there. So that is a bit of a negative pointer for us. Moving on to the 75-minute time frame, we can also notice that there is this presence of the green zone, which marks a resistance zone, support resistance zone, right? This green color. So this is suggesting that there is strong resistance. And of course, we already talked about the 200 EMA of the 75-minute time frame, the lack of volume. And one very important and one big negative point, which I notice on the charts, is that in the last correction, right, the Nifty broke the level of 30 on 75-minute time frames RSI. This is very bearish for the market. And I expect that Nifty is going to come all the way down to retest the recent low it forged and maybe even create a new low. So my target for the correction is 18,600, which is still active. So if you have positions right now, it is going to be very beneficial for you to make sure you have stop losses. I personally have booked profits in the positions which were created from 26th to up to 2nd of November. I had stocks like Indigo, EPL, Abbott India. All of these positions have been booked profits in. Now, moving on to the daily time frame. The daily time frame also suggests that there was this big negative divergence, which firstly initiated the correction that we have already experienced. However, the daily time frame is also not giving the confidence that the correction is over yet, because if you look at the past, never has, at least, since after COVID, whenever the price has come corrected enough for the RSI on the daily time frame to approach the level of 30, it has not gone back into a sharp rally immediately. It kind of comes back. Okay, let me use the pen here. You see, it kind of comes back to the level of 30 to forge another low before it goes up. So I expect the RSI to do the same thing again. And like I said, the volume has been quite low. We need the volume to be a little bit higher for a rally to sustain. So what I believe is that this part of the upside that we have seen, right? This little part that we have seen, this is just a pullback in a correction. It is not the resumption of a fresh rally. With that, let's move on to the Bank Nifty chart, and we'll take the same pattern. We'll start from the 3-minute time frame. On the 3-minute time frame, nothing very exciting, but very evidently the trend line which is passing through the price is posing strong resistance, which is very evident. Remember, I use the cloning method in the trend line, which helps us identify better support resistance zones compared to the traditional method of just joining any random tops and bottoms. Okay. So firstly, there is the presence of a very important trend line there. Secondly, in the 15-minute time frame, there is also again the 200 EMA of the 75-minute time frame, which is posing resistance to the Bank Nifty also. Nifty and Bank Nifty have very strong correlations. So usually the study done on both of them is very similar. So what I can see is Bank Nifty is also, just like Nifty, getting strong resistance from the 200 EMA on the 75-minute time frame. Now, on the 15-minute chart also of Bank Nifty, I can see there is a negative divergence, and the volume in Bank Nifty as well has been pretty weak in this rally gone by. Now, in Bank Nifty, one small difference is that the resistance zone lies somewhere around the level of, actually we can move this up here. So the resistance zone of Bank Nifty is at 43,900 or 44,000 to round it off, and that level has already been reached. So we expect the price to start falling down. See here, this blue line you can see, this is the 200 EMA of the 75-minute time frame, and this other blue line, the faded line that you're seeing, is the 200 EMA of the daily time frame superimposed on the 75-minute time frame. So my expectation is, you can also see how significantly the volume has dropped in this very last 5 moves, that is today. So my expectation is that the price is going to continue to fall. Today morning we had a gap down opening and the market tried to recover, but my personal opinion on the basis of this analysis is that the recovery is not going to last and we can expect more correction to come. So on Bank Nifty, my target again is this green zone. So somewhere around 41,800 is what I'm expecting to see. Now let's take a look at the intersector chart analysis and see what the market is telling us. Where is the rally headed? Which other sectors which are giving us a strong momentum in the last few days? So I am going to change this to the daily time frame. So we are taking the CNX 500 as a benchmark here. And we can see that since the beginning of the month of October, or actually let me change this time frame to 75-minute, and then we can take a look at the price action since 26th October, because that's when the market bottomed out. So very clearly we can see that CNX 500 has moved around 4.5% up since the market bottom. And oh, I moved this. There you go. Perfect. The CNX reality has absolutely blown everybody away. 17.5% rally since the bottom. The rally has been really, really strong, something that even I didn't foresee. The PSE sector has given a 10% rally. The PSU bank sector has given 8% rally. Now, PSU bank sector is experiencing a lot of volatility. But my opinion based on the charts is that your capital, major part of your capital should not be allocated to PSU sector, PSU bank sector. Now, of course, there are exceptions to the rule, but try to keep your allocation lesser and lesser in the PSU bank sector. Now, Nifty Healthcare and Nifty Pharma and Energy, these three sectors I am bullish on for the next few weeks also. However, a lot of rally has already unfolded in these sectors. Infra sector is looking weak at the moment. Commodity sector is also looking weak. Metal sector, I feel there's a little bit of correction still left, but it can start giving some sort of rally. Consumption sector is looking quite strong. FMCG sector is looking strong. Consumer durable is looking strong. Auto sector is not looking strong at all. Stocks like M&M, Maruti, Eicher Motor, there was one more. M&M, Maruti, and the one more I studied, I forget the name. They're all looking quite weak, so be very careful of the auto sector. And then IT sector, like I always say, very attractive for long term. By long term, I mean 4-5 years investment. But for short term trading, it's experiencing a lot of volatility. I was studying the chart of HCL Tech just before this session, and it does not look very strong. So be very careful of where you're investing your money in the market right now. I personally am sitting on nearly 70% cash, which has happened after a long time. I am waiting for the market to fall to reallocate my cash and make some money. If you have investments in the market, now is a very good time to connect personally with a research analyst and ask them to analyze your stocks. Because remember that misallocation, maybe over allocation or under allocation, is not going to yield very good results for your portfolio. If you want to optimize your portfolio return, your capital's use in the market, then you have to work with someone who's a professional who has the sense of what true risk management is, what proper capital allocation means, so that you can get the most value out of your capital. All right, so with that, I have come to the end of the session. But before I go, like always, I will take some time to answer your queries. All right, so what you can do is in the comment section, you can post your stock name at the rate and the cost. So if you have positions that are stuck and experiencing a lot of losses there, or you're not sure where your stop loss target should be, especially your stop loss, then drop the name and the cost of the stocks and I will do a quick analysis for you on screen. But remember that the analysis that I'm doing is very, very high level. It's done really quickly. So the quality of that is of course questionable. If your portfolio is experiencing losses, then I advise you to take a portfolio cleanup. You can get more information on my website, or you can also get in touch with a research analyst of your choice. But I would highly recommend you, irrespective of whom you get it done by, I would highly recommend you that get your portfolio cleanup done. All right, so we have Anshu. He's asking for Canara Bank. Last session also somebody had asked for Canara Bank analysis. So, so I see that Canara Bank gave like a really strong rally with strong volumes, but it started to go into some strong consolidation now. See, if Canara Bank breaks above the level of 395, only then I would recommend you to, continue your participation in the stock. Above 395, that is, it forges the new low. But otherwise, I would not, because there is strong negative divergence in both 75 and 15-minute time frame, which is not very bearish to say per se, per se, but it is risky. If you have an active position, then maintain a stop loss at the level of 378. All right, moving on. Zomato for short to medium term for Manish ji. Let's see. Okay. So strong rally with strong volumes. Correction has seen decline. That's fine. But I think so Zomato is surprisingly looking attractive. But I think most of the rally is actually unfortunately already behind it. So resetting that. It is for a short and medium term, it is good to definitely participate, but I would recommend you to please maintain a stop loss at the level of around 111. That's a pretty big stop loss if you think about it. It's around 7.5%. And on the upside, it looks like it can retest the level of around 150, 160. So see, there is some upside for sure, right? But I think the risk that you are required to take is a little bit bigger than I personally would be comfortable with. But it's up to you. All right, so we have Anurag. He has HDFC Bank and SBIN, both. Okay, sure. So HDFC Bank, you should definitely hold on to. HDFC Bank is looking quite good right now, but you said you bought it at 1,000. So, okay, so your position is in pretty good profits. It's come down 15%, but not a worry. I think you should continue holding on to this bank, but of course, you need to maintain stop loss. And I think this is a pretty good level to maintain stop loss. Um, yes, this is a very important zone that it has kind of come below. If you checked with me earlier, Anurag, I would have asked you, near the top, I would have asked you to maintain a stop loss at 1629. That way you could have, saved 10% of your capital from erosion. But now, since you are already holding it, actually, this also is not a good stop loss. Now, the justifiable stop loss for you, unfortunately, is 1365 because HDFC Bank is, on the downward slide. Um, One thing that gives me confidence is that the volume has improved. No, actually, this doesn't give me confidence. This worries me because this last leg of decline which has come. So there are three things that are very bad. One is the volume increased when the decline came. Second, important support zones like 500 EMA of daily time frame and was breached, and the horizontal support zone, the green zone that you're seeing, also got breached. So it's not looking good. Then the 15-minute time frame is also very bearish on the HDFC Bank. So these things together, I don't think you should continue to hold on to this. It would be better if you waited for the stock to come back down and then maybe take a re-entry. Moving on to SBIN. So for those who might have stock recommendation or stock queries in the future, what you can do is you can join my Telegram channel and you can leave a comment on any of the posts, and I will make sure that I get back to you whenever I have time. So this is my Telegram channel. And when you leave a comment on the posts, right, like for example, you can see people leaving a lot of comments on any of the posts. When they leave comments and ask their queries, I make it a point to respond to them. So if you're interested in connecting with me, then you can join my Telegram channel by typing Trade with Kavita in Telegram and join this. I'm also dropping the link in the comment so that it's easier for you. All right. SBIN also, I think you should absolutely exit because it's giving negative divergence. It's also experiencing a lot of resistance from moving averages, trend lines, horizontal zones, everything. So I'm not bullish on HDFC or SBIN. So kindly exit. See, your holding is at 235, which means that you have a slightly longer term holding, so I'll have to give it more time to analyze, okay, because I'll have to look at the fundamentals and the technicals. So please connect with me one-on-one. You can also use the link which has been posted by the ET moderator. Adani Port purchased at 780. Okay, 780 मतलब आप प्रॉफिट में तो हो अडानी में, बट बहुत ज़्यादा प्रॉफिट में नहीं हो. And the volume has increased, right? The volume is consistently increasing. So I would suggest you to please maintain your stop loss. See, I personally don't prefer to trade in stocks like Adani because of the obvious corporate governance issues there. And when you're trading in the market, there is just so much that you need to take care of that it's better to make sure whatever little bit you can make sure of. For example, corporate governance and the quality of integrity of the management. So in Adani Port, I find that lacking big time. So please maintain a stop loss at 784. Don't just remember that you should not be willing under any condition to experience a loss in the stock. So that's for you, Varun. Now we look at Fortis Healthcare for Ramit. All right, we see a strong move with strong volumes in this one. 345. So you bought it at a very, very good timing, I would say, right before the spike. Um, all right, so it looked like a spike, but it's not very significant volume. It is a breakout, but I would have honestly, I would have liked this breakout to be at a higher volume. The volume looked significant on the 15 and 75-minute time frame, but on the daily time frame compared to the last 100 days volume, it's not anything significant whatsoever. So my advice will be the same to you that let's see if we can determine an upside. I'm going to remove these drawings and I'm going to draw some fresh trend lines. It's very hard to do it on the stock. If that's my maiden trend line, then okay, yeah, this looks pretty good because the lines are being respected pretty well by the price. I don't have a lot of confidence. Looking at the weekly and the daily time frame and also the apparent lack of volume throughout the trend. See, we experienced one single candle with some strong volumes, but the entire upside did not see a lot of good volume, which is not good. So you should maintain a stop loss at the level of 348. The market is full of opportunities. So looking for opportunities is not your job. Your job is to look for good opportunities and only participate in them. Okay. So what I use to participate in very good quality opportunities is a technique called inversion. What is inversion? So instead of looking for stocks where I should put my money in on the basis of certain metrics, I look for reasons to reject a particular opportunity. Now, obviously, you're not randomly opening stock charts and looking, for reasons to buy. I hope you're not. So you must have a certain criteria, certain screener on the basis of which you're getting a list of stocks. On this list of stocks, when you start analyzing, don't look for the strong points, look for the weak points. When you look for the weakness, you're basically making sure that the stock meets your entire checklist. Only those stocks which meet your entire checklist, go ahead and purchase them. See, this shift in mentality is going to take a little bit of time. It's not going to kick in from the first time that you try. You might miss out on one or maybe even two rallies, but it is totally worth it to introduce the concept of inversion in your stock analysis and stock picking process. And if you want to learn more about my inversion technique in my other setup with respect to swing trading, then I have an advanced technical analysis program for people who have some basic knowledge of the stock market. More information of that can be attained in my Telegram channel. So click the link. Moving on to Geo Finance, can I take entry? So Geo Finance is giving some positive indications. See, there is the RSI showing resilience for sure. The 15-minute time frame is yet to say anything very positive, but then I also don't have enough data to, comment on what the stock's nature is. But the stock is also approaching the 200 EMA of the 75-minute time frame, and it'll be interesting to see whether it goes above that or not. Right now, I am being very skittish. I I am buying Geo Finance personally myself also, so that's a disclaimer that I have exposure there. But I am buying very, very small quantities. Okay. So global health data. I am not aware of this stock, so I am going to try to take a look at it. Oh, Medanta. All right, so very strong underlying rally. We saw the volume die out, but it seems like the volume is trying to come back a little bit. Um, See, I have this mantra for trading in the market: enter stocks before the rally. So if you're asking me to analyze the stock right now, unless you're holding it and you clearly want the right time to enter, now is not the right time to enter. The right time to enter was when the stock had given a pretty good dip and come below the 200 EMA on the 75-minute time frame. So keep your eye on the charts, and again when the stock dips below the 200 EMA of the 75-minute time frame, check back with me. Right now the stock is clearly a missed train, which means if you go running after it, you may get hurt. Better to wait at the station, let it come back, then you'd make a fresh entry there. All right, we have HDFC AMC request again from Varun. HDFC AMC. HDFC AMC is looking attractive. It is looking attractive. Okay. Strong underlying rally, some correction, good support from the 200 EMA on the 75-minute time frame. But the volume profile is quite disappointing. The daily time frame is suggesting that, oh no, I am very tired. I don't want to rally anymore. So what should we do? What should we do if the intraday charts are looking strong, but the daily chart is saying no? What we can do is we avoid the stock. We don't make a fresh entry. But since you're saying you have an entry at 2300, which was a pretty good swing trade, I would say, my recommendation to you, Varun, would be to maintain your stop loss. See, the stop loss when the stock was still unraveling would have been this would have been the stop loss, right? 2817. Now clearly that level has been breached and the price is down. But basis what I have just revealed to you, would it have been prudent to make a fresh entry again at 2693? I would suggest it might not have been, because you also have to take into consideration the broad Nifty movement and the CNX, the Nifty Finance Index movements. And I don't think the finance sector is looking very attractive right now. So since you've already missed the first stop loss level, I would recommend you to maintain revised stop loss at 2700 level and continue to hold. If the stock approaches the level of 2900 again, then you should exit. So we have a request on GMDC by Jolly. GMDC is okay. So GMDC is very bearish, at least on the from the short-term perspective. And right now, this has been a good opportunity to exit whatever position you may be holding. And I don't think that the stock is going to sustain at this level for a long time. I think it is going to dip lower for another correction. Now, GMDC is a kind of stock which gives good movements, but also gives good correction. So I think it's already given good movement. It's in the past. Now it is time for it to give a good correction. So if you're holding GMDC, I would suggest please exit. All right. Metropolis for Mr. Sajanji. Sajanji, welcome back to the live session. Metropolis. So I like this stock. I like it for sure. I think Metropolis is a kind of stock that you can buy on dips, and it is a good stock to buy on dips because if you look at the volumes, the volume has been pretty strong whenever there is an upside unfolding. And see, Metropolis is especially a good stock to hold for the long term because it is giving what is called a rounding bottom, like a very textbook quality rounding bottom, right? If you see here, it peaked out here, came down, went sideways, and it started to come up. And it has overcome the first resistance zone and started creating higher highs and higher lows. So I think the stock is in a very good momentum to go up, and it can be bought on dips. With that, I have come to the end of this session. Thank you so much for joining in and giving me your time. On this auspicious occasion of Dhanteras, I wish everybody attending a very, very happy Dhanteras and very, very happy Diwali. The next week, I will not be coming live because I'm taking some time off to be with my family. So I will see you again in the week after. I wish everybody great festivities and celebrations. Stay safe. Don't burst a lot of crackers because they are not good for you or the environment. And if you wish to connect with me, join my Telegram channel. I will see you again after 1 week. Namaste.